Hello and welcome to this episode of GoldCore TV. And today we are talking about technical analysis. And I'm joined by charting guru Chris Vermeulen, who is the founder and chief strategist at thetechnicaltraders.com. Chris, welcome to GoldCore TV.
Hey, thanks for having me, David.
Now, I've been a subscriber and a follower of your work for a while now. And as a former trader myself, I still have a keen interest in the short-term trading signals in all markets. However, our clients at GoldCore and our GoldCore TV subscribers, they understand the important role that precious metals can play in a portfolio over the long term. So they're very interested in the bigger picture and the longer term chart patterns for precious metals. So with that said, what are you seeing for gold at the moment? How do you think 2021 is going to fare?
Yeah, it's obviously it's going to probably be a little bit of a wild ride. I mean, if you look at what's been happening just in the last couple of days, or really this year, for gold and silver, we're seeing pretty big pops and drops. I mean, we saw the first day, it was a big rally kickstart the year in metals. And then we've got everyone worrying about the Biden overseas here or in the US over here. And everyone's kind of panicking now. And so we're seeing gold drop about 2.5% as we're talking right now. So it's going to be probably a wild year because there's lots of regulations and policies and new president in the States. So there's going to be some chop, but with uncertainty and with what's going on and the currencies really just kind of devaluing. I mean, precious metals are in the perfect storm. The last time we actually had a technical setup like this, a long-term cycle, I did a presentation talking about this 15-year cycle for commodities. And the last setup was in 2004, 2002, the very end of it is when it's set up. And we have a really similar setup in terms of the majority of traders and or more or less investors have been moving into equities, very tech heavy, and also into real estate. And when you look at the value of the different assets between like real estate and stocks versus commodities, there's a huge disconnect. Commodities are undervalued. They're down at like 80-year lows. And the last time we saw this, we all know what happened in gold in 2002. It was a major bottom and it rallied for a long time. And it's still in that bull market. But we're resetting for another major leg up in metals. And that's what's really exciting because we're just in the infancy stage of where I think metals could be going over the next several years. So
you see this then as a continuation of a bull market that started since kind of the 2000 and 2002 area, yeah?
Yeah, so we've had a big pause. Like I can share my screen here and give you a visual here. So to get an idea of what's happened this year, just these last three trading sessions here, obviously we've had a huge pop in gold on the daily chart, and then we've come right back down. And that's because the market is moving based on news. And as long-term investors, we don't really care about news. All it makes is noise on the chart. So I'm going to drop down to the monthly chart and give you guys a bigger kind of view here of what gold's done since 2002. So here we are in the lower left. And you can see this is right when we saw a very similar setup, same setup with the US dollar value as well, the currency when it started to collapse. I mean, we just saw this series of, it's hard to tell, it's so condensed, but it rallied and it took a pause. It rallied, paused, rallied. So it's a series of bull flags is what they're called. And you could look at this as a super cycle bull flag, and we're just starting to break to the upside for another, what could be a very big parabolic rally in precious metals. Really, this is where things went dormant over the last 8 years or so. And you can see if we were to just zoom into last year, you can see when it broke out, when a commodity breaks out of a multi-year basing formation, you're going to see a very big run. And that's what we saw in gold. It broke out early in 2019 because investors around the world were getting concerned, and it actually led the way. Usually gold stocks lead the way, but this was a different type of fear that came in. It wasn't speculative people. It was people actually worried about their net worth, their value, and hedging against currencies and crises. And so that's why gold was the first one to break out. It's had this beautiful move to the upside. And right now it's kind of consolidating in a way that this could chop around and consolidate in a big range still for several months. But overall, the pattern is pointing to a much higher price. And if we were to just use a simple technical analysis tool, Fibonacci extension, we can look at this major formation that's formed and get an upside target of where it should go. So to keep it really simple is if you take the low and then you take a high, and then wherever it corrects down, you tag that as the next lower low. And using Fibonacci, which is a series of percentages, it gives you an idea where the next targets are. 618 is a target that I always use to take partial profits off, get ready to just trim something as a shorter term trader. But if it hits the 618 and pulls back, we almost always see the 100% measured move reach, which brings us up to $2,690 US for gold. So it's primed and ready for a really big move to the upside. It's probably a pretty small font, sorry, but a really exciting move for gold in terms of what's been forming here. So looking forward 3 or 5 years, we'll probably be up in that mid upper 2000 range, and potentially it goes all the way up to $3,500. So technical standpoint, I mean, gold looks really good here with what's happening around the globe.
Wow, excellent. And talk to me for a moment then about silver. Our community is very interested, and our clients very interested in silver. Now, silver, as you can see from that chart, significantly more volatile.
Yeah, definitely more volatile. It had a breakout. I'll just zoom in a little bit. I got a lot of noise on this chart, a lot of drawing, but more or less we had a breakout down here around this 18, more or less the $19 level. And then the real big breakout here was around this $21 level, this previous high. Once you break out of this multi-year basing formation, just like we saw in gold, you're going to get a big pop. And then the first pullback is usually one of the best opportunities to get in if you miss the pop. So silver is a year behind gold. It's got, I think, way more upside potential. And it's kind of consolidating in what looks to be a bull flag formation, which means you create this flagpole by price going straight up, and then it flags and waves down in the wind. Kind of think of it that way. And it always flags down against the trend. So the trend is up, it flags down. All it is investors and traders taking profits, new people getting positioned in weekends, selling to those new investors. And then eventually you see the overall trend continue to the upside. So I'm looking for $34 kind of as the next significant upside target for silver potentially this year. It could go a lot higher. I've got targets all the way up to around 82 for silver. So there's some pretty big explosive moves that could take place in the silver sector. Definitely percentage wise, it's the place to be. I own a lot of silver, although when I collect physical, I'm still about a 65%, I would say, is silver, and then the rest is gold. I still like to keep a big weighting in gold because you never really know which commodity is going to be the bigger mover. Most people kind of lean towards silver, but the markets always have a way to throw you off your game, and everybody will pile into silver, and then they see gold go through the roof because some currency or country backs it or something as a currency. So I definitely like to try and keep them a little more weighted, a little more silver. But I still like gold. I think it's kind of like a sleeping giant that I think with the currency crisis in digital currencies, it could really come back and become an asset to back some currencies down the road.
And if we were to look at silver on a 100% measured move on a similar basis to what you looked at gold there, what type of a...
Right. So let me just pull this up. So this chart won't show it. I can't go back far enough on this one, but this is a bit different of a play. So if we were to look at this pattern here, at this point, it's saying we should go all the way up to around 41 is the 618, and then 58 would be the next target. Okay. Silver's got a bit different type of move in terms of how it goes. It likes to go parabolic and how it's done it in the past. And that's the type of move that would bring it up to that 80 range. It's not kind of calculated into this. But here we're looking at 41 and 58. Either of those would be amazing to see. So definitely really exciting times for silver. And so we talked about gold. It broke out in 2019. We talk about silver breaking out here in 2020. It broke out in 2020. Now, if we take a look at platinum's got a really interesting chart as well. Let's just zoom in a little bit more. You can see here, it's been trading sideways for more or less 1, 2, 3, 4 years. And if we were to draw a resistance line across these peaks through here. Every time it gets to this level, we see it sell off. It broke through it a few times, got pulled back down and tested. And then finally in December, it broke above that level, which is really significant. So platinum is on the infancy stage of starting what could be a multi-month quick surge up to 1400 plus. So there's some pretty good gains in platinum. And it's really December 31st, or the last trading day in December, was kind of the signal. It closed on a month above this resistance area. So now January is the starting point to get into this opportunity to the upside. So platinum is the freshest of the metals of starting a new bull market. So it's pretty interesting. Not a lot of people are talking about platinum. It's kind of it's fallen out of favor. It's pretty dormant. I mean, just people aren't interested in buying platinum bars or rounds or anything like that. I find nobody talks about it. And that's what makes a bottom. When nobody wants something and they've forgotten about it, it's going to bottom. It's going to start to put in some huge gains, and they won't catch onto platinum until it's around 1400, where, you know, all of us would be sitting in here going, yeah, we're already up 40%. So it's pretty exciting that how that commodity is starting to shine more than the other ones in terms of a fresh new run ahead of it.
So, I mean, fundamentally, we're looking at the fundamentals are very much supporting higher metal prices, particularly if we're looking at stimulus packages in the US and similar across Europe and the UK. Technically, it's very positive for metals as well, looking at the charts. Is there anything that you are concerned about or worried about in terms of what might be banana skins for these markets?
Yeah, for sure. There's no doubt that a lot of people have a false belief that gold, more so gold, is a safe haven or a hedge. In reality, it's really not if the stock market collapses. We always tend to see gold and silver collapse when the stock market does. Long term, I mean, it's a solid, pardon the pun, a solid asset, but I use it as an insurance plan. I like to try to get like 7 or 10% of my kind of net wealth in metals, because if there is a giant catastrophe, which is looming and could happen, we could see metals go through the roof. And hopefully that would, you know, take off so much it would counter your losses in real estate and your other currency, you know, savings and things. So you at least kind of keep a level field if things get gnarly. And that's why most of us precious metal investors hold it and buy it. It's that we want appreciation, but we want that protection in case the financial system has some type of collapse. In terms of sorry, what was your question there? It was,
I was just saying any banana skins.
Sorry. So 2021, we're going to definitely have volatility. And just like we saw last March, we saw a big drop in the stock market. It pulled metals down. Metals sell off when there's fear, believe it or not, when there's panic, not fear, when there's panic. And when there's panic in the stock market, when COVID hit, when people thought they weren't just going to lose the money, but they were potentially going to lose their life, everyone liquidated everything collapsed. And so it pulled metals down, and that is fear. That's panic selling at a level that people just don't care about money anymore. They're just like, get me out of it. I'm going to just lock up and just protect myself. I think going forward, long term, we're not going to have that same COVID type of fear that'll affect metals as much. If we do see selling in the stock market, it'll definitely pull metals down a little bit. But I think there's that'll only be panic. I think right now we have fear of a financial collapse, and that's going to keep metals going higher. Stimulus is going to continue to, the more they do, the better it is for metals in reality. So it's going to be a bumpy ride, but it should be heading up, up to the right on the chart long term as an investor to hold it.
So don't worry about short-term volatility if you're the long-term investor, yeah?
No, I wouldn't worry about it at all. I mean, we're just starting a huge major super cycle, like I mentioned before, and it feels like the perfect storm. And of course, as an investor, as long as you're holding 5, 10 plus years, I mean, you should be golden, pardon the pun.
And talk to me for a moment about what it is that you offer that our community might be interested in. And I think in particular, you have some offerings that suit for longer term investors as well.
Yeah, I do. So I do have a shorter term newsletter called the Band Trader. We move around trading the hottest sectors in the US markets. Now in the UK, it's a little different. ETFs are tougher to trade. But I think for long-term investing wise, we have the technical investor. And so we follow the SP 500 and we follow gold and and also silver as well. But we're trying to focus on long-term steady growth. And when we want to be long the stock market, we'll be long with our portfolio with one simple ETF. And then when gold broke into a bull market, we added a portion of that portfolio to own gold. And so that's what we focus on, are the long-term trends of the stock market and gold. And we just change our weighting. Do we want to be more in stocks, more in gold? And sometimes we move to cash. We do keep a cash reserve as well. So it's kind of like a long-term portfolio, kind of couch potato investing style. We update it once a week, but really there's, maybe one or two position changes a year, very minor, move some to cash or buy some more gold, whether it's bullion or, an ETF on it. It allows you to kind of just do what you need. So really makes investing comfortable because you're not going to get caught in a big bear market and in the wrong asset class.
Where can people find out more about that?
Sure. They can visit thetechnicaltraders.com.
Super. Right. Well, Chris, I'd love to be able to check in with you in a couple of months, maybe another catch up. Sure. But for today, thanks a million. That's been fantastic. I've been delighted to have the opportunity to speak directly to you. As I said, I've been a subscriber of yours for a long time and really respect what it is that you do. It's really quality stuff. So thank you very much.
Well, thanks,
and
David.
For everybody else, get onto thetechnicaltraders.com and also like, share, and subscribe to our channel here at GoldCore TV, and you can stay up to date with everything precious metals related by signing up to our newsletter at goldcore.com. But for me, Dave Russell, thank you very much.